All right, looks like we're coming through loud and clear. Thank you, everyone, for joining us today. My name is Steven Primo, and I am the president and founder of SpecialistTrading.com. We believe we are your premier online source for education and trading the Forex markets. I want to say thank you to all the good people at FX Street for helping me. This is my first time using their new platform to present webinars, and I may be a little uneven with this, so I'm not sure. The first time I've used this, so I just want to make sure I'm coming through loud and clear and that you can see everything okay. If I have a little problem during this presentation, please bear with me so I can answer any questions or make sure that you got all of the information. But it looks like we're coming through loud and clear and everything is being broadcasted perfectly. For those of you who aren't familiar with me or have never gone to my webinars before, once again, my name is Steven Primo. I'm the president and founder of Specialist Trading, and I've been actually trading for 35 years. I started out in stocks. My background is in stocks. I was on the floor of the Pacific Stock Exchange for 16 years, and I was a specialist for 9 years, therefore the name Specialist Trading. A lot of people are unfamiliar with that term. A specialist is basically, if you've ever seen the people on the floor behind the big wooden platforms, those are the people that basically specialize in a certain amount of equity, somewhere from 35 to even 70 equity. So if you wanted to buy or sell anything, you basically had to go to that person who specialized in those stocks. But even though my background is in stocks, I've traded for so long and traded just about every market. I've seen just about everything you can imagine, different market environments, crashes, great bull markets, different volatility type of markets, different systems, styles of trading. So I'm really well versed in all of these. I've traded different styles in different ways and until eventually I found something that really worked for me, something that changed my trading around. Because believe it or not, even though I had all this background in trading on the floor, I had a very difficult time trading when I first started out. Couldn't seem to get things going, and so a few elite traders on the floor were able to change my way of thinking and change my way of trading, and I was able to eventually become consistent. So I want to share with you, that's why I started Specialist Trading roughly about almost 3 years ago, where I just start presenting and sharing all the information, all the tips and techniques that I've accumulated in my 35 years and share them with you to educate your trading and to take your trading to the next level. As I stated, we are an educational website. We provide you with courses and learning capabilities so that you can really get out of that rut you may be in and begin to trade. Even though we provide you with strategies and signals, we're really all about making sure that you can do it on your own, and ultimately you'll be able to spot these things on your own, and we guide you, and we're there with you every step of the way, but really we want to make sure that you're going to be the one who you're going to be taking the directions from, not an outside source. So what I want to share with you today, what I've learned in my 35 years is what I call my favorite chart pattern for trading the Forex markets. I believe the Forex markets are the best markets around for trend trading, and that's primarily what we focus on at Specialist Trading. And I want to share with you a chart pattern that really fits in perfectly with this style of trading. I'm also going to share with you what I think most people tend to look for in chart patterns and in different type of patterns when they're looking for trading. And I'm going to show you the ins and outs of those, and then I'll share with you my favorite chart pattern for trading the Forex markets. But before we begin, as always, I ask that you please take a moment to view our disclaimer. I'm going to show you some performance results using this chart pattern, but please remember that we are in no way guaranteed that any of these results will be repeated in the future. We're required to show you this, so please take a moment to view my disclaimer. And while you're doing that, I'd also like to mention, I'm sure a lot of you have come to my presentations before, but my style is a little bit different. I like to take questions, and in fact, I welcome every and all question that you can think of, but I like to wait till the very end of the presentation. So if you can please wait, I really appreciate it. It tends to flow a lot easier. And since I'm using this new platform today, I may be a little confused as to where to actually look for your questions. So it would help me out if we just waited till the very end of the presentation. Okay, so we'll give you a phone number as well as an email address, where if you want to, if you'd rather ask questions that way, you can submit it to us or call us up and I'll answer them. Or we can just wait till the last 10 or 15 minutes of today's presentation and I'll answer any question that you may have. Okay, so I really appreciate it. If you get a question during the presentation, just write them down, okay? And then we'll get to them in the last portion. All right, so I'd also like to mention, if you have any questions about what we teach or any of our strategies, FX Street has been so kind to furnish us with a microsite that they have on their website. This is the link for it, and we've really shortened it down so that you don't have to try and recall all that or memorize that. I'll give you this link as well later on in the presentation, but at the bottom yellow portion there, that's the link you want to copy down. And it'll take you to our microsite, which gives you a lot more information. So if you have questions specifically about our strategies, the cost, and any discounts we have, you can go there. And this is actually what you'll be seeing. This is the Pro Traders Strategies, our sister site, which gives out more information. And just simply click on course descriptions here on this FX Street page, and it will take you to another page where we really go into detail and explain everything that we have. Okay? So if you want more information that way to ask any questions, go to the link we provided at FX Street, the microsite, and I'll also give you that link at the end of the presentation as well. All right. So now that we've got that out of the way, I want to talk to you about what trading should be, because everyone comes into trading with a different idea. Some people think, well, trading is all about the news. It's all about economic reports. It's all about learning to see what's going on in the world. Someone would say, well, actually, no, trading is about joining a chat room or a trading room or being able to converse with others and be in some type of group, and that's how you get your ideas and that's how you get your information. Whereas someone else may say, no, trading is all about technical indicators. It's all about, what you see when the charts align and when everything is perfectly aligned in the pattern or the indicators cross. That's really what trading is. Well, those are all fine and well. I don't say that I subscribe to each and every one of those. But when we narrow it down to what trading should be, this is what was taught to me when I was on the floor. Remember, I told you I struggled for a year or two with trading. And when my mentors finally were able to turn my trading around, what they taught me that trading should really be is non-subjective. Regardless of which style you go into, there shouldn't be any room for doubt. In other words, two people should see the same thing. When something is subjective, you can say, well, that's a clear-cut buy signal, and another person can say, no, that's a clear-cut sell signal. You should never get to that point where it's that subjective. It should be more clear-cut so that you really fully, everyone can understand, and once they understand the process, once they understand the rules, they're both coming up with the same decision. Okay? So trading, if you want to be consistent, should be non-subjective. There should be a little bit of room for subjectivity, but it shouldn't be that subjective where that two different people are getting two entirely different signals. Okay? So look for things that are non-subjective. Also, trading should be consistent. And what we mean by consistent, we don't mean that every trade is a winner. We know that's virtually impossible. But we mean that your trading equity shouldn't look like a roller coaster. In other words, you shouldn't have 2 or 3 great trades where you make tons of money and then one terrible trade where you lose everything. Because this was similar to the way my trading was when I first started out. I would have a couple of great months and then I'd give it all away. So you want this more of a steady type of 2 steps forward, 1 step back approach, more like a stair step or a nice upward slope in your P&L. That's a reflection that your trading is consistent. Really what we're looking for in consistency is hitting singles. We're not going for home runs, we're hitting these nice little singles. So your trading plan, whatever it's based off of, should be like that. You should be looking to hit these nice little singles. And then lastly, it should be as simple as possible. I think that there are too many traders, especially beginning traders, that try to overcomplicate your trading. I know I did. When I first started out, I tried to overcomplicate my trading. I had so many indicators on my screen. I was following so many markets. I was involved in so many different types of subscriptions at the time, telling me what to do and what not to do. It was just too complicated. And my mentors taught me, they said, Steve, it's the easiest thing in the world to complicate your trading. Anyone can do that. It doesn't take a rocket scientist to complicate your trading. But it's the most difficult thing in the world to simplify it. That really means that you've really, taken your knowledge to the next level once you can simplify and reduce all the things you're looking at and relying on. So trading should be as simple as possible. I often say this, that most of the traders that have been trading markets for anywhere from 20 to 50 years have the simplest plans of all. They have maybe 3 or 4 rules and that's it. There's really nothing complicated. But with those 3 or 4 rules, they've been able to trade and sustain their trading for the last 30, 40 years. It's mainly the beginning traders that have all these convoluted theories and real subjective ways of trading. and they try to make things too complicated. So in order to really be consistent, in our opinion at Specialist Trading, you need these three things involved in whatever trading plan you decide to use, whether it's one of mine or whether it's something you came up with or another educator. Please remember, it should be non-subjective as possible, where two people clearly see the same thing. It should be consistent, where it's not just relying on home runs, but these nice, small, consistent gains. And it should be extremely simple. Not a lot of rules, not a lot of real hard thinking going on to this, a complication. It should be very simple to figure out. All right? So that's what we're looking for. Now, with that said, I want to basically share with you the Specialist Edge, because that's really what the edge was that was taught to me. Remember, I'm saying I want to teach you this edge. I'm not simply trying to force feed this to you. I don't want to provide you with signals and just say, well, just take the buy signal I had in the euro dollar 3 days ago, or just take the buy signal we had in the euro yen 3 days ago. Those are actual trades we had and we gave to our members. But I don't just want you to take those trades without knowing the process behind them. My goal is to teach you how to trade with the Specialist Edge. All right, so here's what you're going to learn today. I'm going to tell you the truth about formation patterns, okay, the real truth, and I'm also going to tell you the truth about candlestick patterns. And then lastly, I'll share with you my favorite chart pattern, okay? So before we begin, once again, just let me remind you, save any questions to the very end. Once again, I'm trying to get familiar with this new process here, and so I don't think I'll have time to even look at the page that has the questions on it till the very end. All right, so thanks for waiting, and I really appreciate it. All right, so let's start out with some formation patterns. These are what most people rely on. This is the way most people were taught. I know I was when I first started out. And these are the most basic and the most popular formation patterns that people use when trading the Forex markets. First one is an ascending triangle. This is a bullish pattern. And the premise is basically where you have this kind of a triangle as we have here in the lower portion, where you make a higher high followed by a lower low, and then another high which pretty much matches the previous high, followed by a lower low. So you have this ascending triangle right here. And then when it breaks out of this resistance, that you have a really nice upward move. That's the goal behind the ascending triangle. Where in reverse form of that is the descending triangle. It's basically the same thing, you just turn it upside down. Okay? We have a low, followed by a lower high, followed by another low, which is just about the same as the previous low, followed by a lower high, and then once we break that support, that's when the move goes to the downside. That's the supposition that a descending triangle is. It's a very negative pattern. Or how about this pattern? This is an ascending wedge. As you can see here, we look like we have a wedge formed. And an ascending wedge, even though it may appear bullish because we've been going up, is actually very negative, because the premise is that once we break this wedge here, we close below, we should have a very nice move to the downside. Conversely, we have a descending wedge, all right? As you can see, once again, it looks like a wedge pointing to the downside. The school of thought behind this is once we break this to the upside, we have a very nice move to the upside, okay? These are all very popular patterns here. These are all very popular and used a lot by Forex traders. And probably the most common and popular pattern used out by all traders is the head and shoulders, okay? It's a very, very simple pattern, something that most people see right off the bat. And all it is you have some support right here, which is called the neckline, followed by a left shoulder, a higher high, which equals the head, and then a lower high, which equals the right shoulder. So you have this shoulder, head, shoulder point of view. And the common thinking behind this is once you break the neckline, the support, you'll go down much lower. And the same thing works upside down as well. Here's a perfect example of how that worked in the dollar yen on a 4-hour chart recently. As we can see here, we have a 4-hour chart of the dollar yen. Someone would look at this and go, hey, wait a minute. We have a nice head and shoulders here. We have a neckline, which is our support. We have the left shoulder, the very complicated head up here, the double top, and then we form the small right shoulder. So in actuality, this is a great sell signal. We should be selling right here. We close below, and this is a great area to get short. So what you would do following this pattern would simply sell, and then look what happens. Okay? Look familiar to anybody? Now, someone would say, well, maybe I jumped the gun. Maybe I was a little bit too early. I'll just kind of wait around. And so you wait and you say, well, hold on. Now, possibly I was a little bit too early. I think actually we have a far better head and shoulders pattern here, and this is the actual head and shoulders pattern that I was originally looking at and what I originally wanted to do. So after all, you should sell this and it should go down, right? So you sell, and then look what happens. So this is very common. We see this because, we talked about this earlier. Why is this? Because these are very subjective. In other words, it's not cut and dry. Remember we stated we want something that is cut and dry. We want something that everyone will see the same thing and it'll be consistent. We don't want to get stopped out twice in a row here because it'll eventually come back to us and we'll have a very difficult time trying to regain our confidence and get back into a trade. Here's another example of that. Support and resistance. This is probably the most common way that Forex traders trade. Everyone that I talk to, all of my students and people that I mentor and in presentations, they love support and resistance when trading the Forex markets. And that's all well and good. That's fine because support and resistance is something that's followed by a lot. It's very good way to trade. As you can see here, here's an ascending trend line. And basically it's resistance followed by higher resistance up the way, followed by lower support. So here's a perfect example of the British pound on a daily chart where we just about mirror that same image of support and resistance. Here's our resistance, higher resistance. As long as we keep breaking through, we should be doing fine. And here's our support levels. So what one would naturally want to do is purchase around support and sell around resistance. So looking at this, we'd wait for the British pound to come down to the support level in order to buy. And as you can see, it didn't work. Well, if that didn't work, well, then we're going to use this support level. Okay? This is where we're going to actually buy. And as you can see, that didn't work either. So once again, the truth about these formation patterns is that they're great when they work. But when they don't work, they're miserable. They're very difficult to trade, and they're very tough to get a hold on. So when they work, they're great. When they don't, it's very tough. The reason is because they're too subjective. Remember, we want things that are cut and dry. We don't want things where someone could look and say, well, that's support, and someone else would say, well, no, that's resistance. We want things more cut and dry. And there are a great many educators that teach support and resistance, and there are a great many traders that make a great living off support and resistance. But it's very difficult to teach. It's something that you have to have inherent and be able to really focus and see on your own. I used to know tons of traders on the floor who had this kind of inherent type of chart where they could know exactly where support and resistance was. But see, it was subjective. They couldn't teach that. They just automatically knew. That's why we don't want to focus. As an educator, I can't teach something that someone feels. You have to stick to things that are more cut and dry. Now let's go on, talk about individual candlestick patterns. This is another thing that most people love to trade in the Forex markets. I think there are more candlestick pattern traders in the Forex markets than any other market. Well, let's look at the most modern patterns there are for candlesticks. You can see anything from a doji to haramis to engulfing patterns to piercing lines to evening stars. And these are all well and good. In fact, specialist trading incorporates a few candlestick patterns into our trading strategies. Here's the only difficulty with them. Once again, they are not as consistent as everyone thinks. As we can see here, we have a nice uptrend, and this is probably one of the most popular patterns around, which is the bullish engulfing pattern. So someone right here would say, that's a very positive pattern. Candlesticks, this is very positive. I'm going to go long. So you would simply buy, and then look what happens. Okay? Where's the consistency there? See, the trouble with candlestick patterns is that you have to trade them when they are in sync with the trend. In other words, if you've got a bullish pattern, the trend has to be bullish. And if you had a negative pattern, for them to work with consistency, the trend has to be negative. But most people use them the opposite way. And then also there are too many subjective and different ways in which to determine trend. So you see how all of this is getting far too overcomplicated. It's getting way too overcomplicated. Remember, we said we want to stick away from subjective things. We want to stick away from things that are overcomplicated. We want it to be consistent. Trading should be non-subjective, meaning that two people should see the same thing, not coming up with two different answers. It should be consistent. We didn't see any consistency there in those patterns. And it should be as simple as possible. Once again, it was getting far too complicated. So this is the trouble with common patterns that people have. Not to say that they do not work, but just that there's no consistency and they don't follow all of these three rules here. So now I want to share with you what I feel follows all of those three different categories. This is my favorite pattern. Okay? We want it to be consistent, we want it to be simple, and we want it to be non-subjective. This is my favorite pattern for trading. This is it. Simple enough? I don't think it gets much simpler than that. We can actually make it a little more simple, because if we see a bar, regardless if it's a 5-minute bar, a 4-hour bar, or a monthly bar, and it closes in the top 25% of its range, then we should be looking to buy. That's it. I'm not saying we should jump in and buy the market, but we should be looking to buy. This is the market giving you a clue as to which direction it wants to head in the short term. I can't think of a better pattern than this, simpler and easier to follow. There's no way someone would come up with a sell idea looking at this. It's clear-cut, it's non-subjective. If a bar closes in the top 25%, you're bullish, you're looking to buy. Conversely, we have the other side of the coin. If you see a bar close in the bottom 25% of its range, regardless of the time frame, if you're looking at a tick bar or if you're looking at a monthly bar, you should be looking to sell. Now, did I say you should sell at the market? No. You have a lot more pieces of the puzzle to get to that point. But this is a great clue, just as those other patterns have been taught to you to be great clues. This is much simpler, much more consistent. Let me show you what I mean here. Now, people will always say, and they always ask me, especially my beginning students, like, Steve, what is so important about this chart pattern? How can this be that important? It's too simple. It's too easy. Well, when a price bar closes either at or near the top or bottom of its range, depending on which side of the market you're on, it just means that the market is giving you a great, tremendous clue as to which direction it wants to go. Okay? I'm going to repeat that again. When a price bar closes either at or near the top or bottom of its range, it means that the market is giving you a clue as to which direction it wants to go. This is probably one of the best patterns I've ever seen in any time frame, in any direction. Much simpler to interpret. There's no room for discretion. It's very simple, and it's very consistent. All right, so how exactly do we implement this then? Okay, it's a great clue, but how are we going to use it? All right, you may want to write this down. This is just a rule, but remember, we're not giving you a strategy. We are telling you a great piece of the puzzle that you can incorporate into your strategy. Because let's say you have a strategy that you're comfortable with, you feel confident with. All right, if your strategy gives you a buy signal, use this chart pattern or look for this chart pattern as your entry bar. In other words, don't wait to get in until you see this entry bar. Or you can use it as a directional tool. I'll show you in just a few minutes what I mean by a directional tool. So in other words, I don't care if your strategy is built off fundamental news or if it's built off the full moon cycle. It doesn't matter. But rather than just simply jump in when you think you get a buy signal, wait to see this bar close either at the top of its range or in the top 25%. Okay? And the same thing goes if you get a sell signal. If your strategy gives you a sell signal, either use this chart pattern as an entry bar. This will be the bar that you enter on once it's completed. Or it'll be a directional tool. But when I say directional tool, I mean a tool that will show you the short-term direction or the continuous direction of the market. In other words, the market is giving you clues as to which direction it wants to go in. All right, let's go into detail and show you how this can be used. Let's look at daily bars, just to show you how consistent this is in any direction and in any time frame. Let's look at a current chart here of the British pound. This was a chart going back to September, middle of September, just not even a full month ago. The British pound had a really nice run-up. Okay, let's say our strategy was a pullback strategy, meaning that we want to find the trend, and then we want to look for these little sell-offs or pullbacks within the trend. Okay, that's our strategy. That's what it's based off of. And usually we enter when our strategy gives us a buy signal. Well, rather than just wait for that buy signal, let's wait to enter if we see a bar close in the top 25% of its range. Okay, so we're in an uptrend, and we're looking for pullbacks, which mean these little sell-offs here. Okay, now at this point right here, guess what? It's the first bar that closes in the top 25% of its range. Okay? So that, someone could have said, well, I'm going to enter right here, or I'm going to enter here on this little pullback. Simply wait for this. This is a much better clear-cut chart pattern, giving you a higher probability entry. When we say higher probability, we're not talking about getting in at the lowest price. We're not talking about getting the lowest possible price to go long or the best possible price. We're talking about a high probability that the trade will work out. That's all. And as you can see, market went up, quick 250 pips in the next couple of weeks, okay? So we had a nice uptrend. And then we have another pullback here. As you can see, someone would have said, well, I'm going to buy here on this second bar down or right here. Simply wait for a bar to close in the top 25%. And guess what? Another 400 pips to the upside. You see how simple that is? Now remember, this is not a strategy. I'm not teaching you a strategy today. We have strategies based off the same principles. I'm just showing you this one great chart pattern that will really help elevate your trading. See how simple it is. We're trying to keep things as non-complicated as possible. All right, so let's look at that same type of pattern. We're basically now looking to go short. We're in a downtrend, and we're looking for a pullback to the upside. All right, so here's a Swiss franc, same thing coming into October, just last week. Obviously, the dollar Swiss franc is in a downtrend, so we're looking for these little bounces, okay? And once we get a bounce, that's a pullback to the upside. We're looking for that bar that closes in the bottom 25% right here. There it is, bottom 25%, and guess what? We continue to go lower. Another bounce right here, bottom 25%, we go lower. Kind of a bounce to a kind of sideways movement here. We find the bar that closes in the bottom 25%, and we go lower. We had the last bounce roughly about a week ago. We have a close in the bottom 25%, and then lower. Okay? Now, someone could look all day for support and resistance. They could come up with different levels, Fibonacci, support resistance level, looking off past highs and lows. Why overcomplicate your trading? Just look for this pattern. This pattern is telling you everything you need to know. If you are in a clear-cut downtrend, this is giving you the direction. It's basically telling you that we're headed much lower. Let's look at weekly bars, okay? The importance of seeing how well a pattern transfers over is to see how well it works in any time frame. Going out to weekly bars, we have now looking at a weekly chart of the Swiss franc. And weekly, we're actually in an uptrend. Here was that last small downtrend we just looked at. But looking at weekly bars, we've actually been in a very nice uptrend. So now we're looking for sell-offs to the downside, followed by a bar that closes in the top 25%. And all along the way, while we're in this uptrend, we see here that the Swiss franc on a weekly basis is giving us great clues as to the short-term direction. All right, let's look at a monthly bar. All right, a monthly bar chart, same concept. The euro-yen coming into July of this year was in a clear-cut downtrend. All right. Rather than looking for support, resistance, Fibonacci, rather than waiting for the news to tell us what some economic report was, we're simply going to wait for this chart pattern to tell us that we're headed lower. Here we are closing in the bottom 25% on these little bounces. And the market is giving you clues as to which direction it wants to go. See, it's much simpler and a lot more inexpensive. Rather than signing up, subscribing to all these chat rooms and trading rooms and services, you just have to simply look at the chart in front of you. This is what my mentors taught me. They said, Steve, you're wasting all your money on all these subscription services you have and all these different market gurus you follow and everything. Everything you need to know is right in front of you. And so I really stripped away, and remember we talked about anyone can overcomplicate your trading, but it really takes someone disciplined to simplify your trading. And this is what it takes. All right, let's look at intraday bars. Intraday bars, once again, we have a downward move here on the pullback. Here's a buy signal, goes to the upside. We have another downward move, another close in the 25%, another move to the upside. Here's another one. We have a downward move, and we have these bars that close in the bottom 25%, almost to the bottom, and then when the trend changes, same things. So you see these are great clues. Are they 100% reliable? No, nothing is 100% reliable. There are small losses in everything. The point is you want something that's consistent, though, and something, as we said before, is simple and non-subjective. All right? Please remember, though, points to remember in closing up. This is not a strategy. All right? This is not a strategy. This is just a piece of the puzzle that you put into the strategy. This pattern is best used either as an entry bar or a directional tool. So even if you don't trade one of my strategies, if you want to trade other strategies, if you want to trade a strategy that you've come up with yourself, great. But look for this when you're looking to enter, all right? Rather than use the same old entry point, either placing a limit or going at the market, wait for this bar. If your strategy gives you a buy signal, wait for a bar that closes in the top 25%. If it gives you a sell signal, wait for a bar that closes in the bottom 25% before you get in. Okay. You can apply to any time frame and in any direction. Okay, so this, as you just saw here, we gave you examples going long and short. Just remember that the higher or lower the close, the better the pattern. So if you see a bar close at the very high, it's giving you a higher probability that the trend is going to continue in that direction. Same thing if the market is going straight down. All right, so let's recap. We talked about the truth about formation patterns. We told you about the truth about candlestick patterns. And then we showed you my favorite chart pattern. Please remember, though, that when we say the truth about formation or candlestick patterns, we just mean that they will work and people do very well off them, but we want to have this consistency. We want to take the subjectivity out of them, and we want to also make them simple. That's why I rely on my favorite chart pattern more than anything else. We incorporate it in just about 3/4 of all of our strategies, because this makes sure that we're in sync with the trend and going in the right direction. Now, if I can take a few minutes, I'd like to talk about one of our best performing strategies. This is Forex Swing Trader strategy number 5. In fact, this strategy itself is built off the candlestick pattern, okay? But we use it in a different way. We apply our own trend filter, and this has produced over 125% gains in 2 years. And I see here Mike is just saying, Steve, I've seen charts with candlestick patterns that gave false signals, Steve. That's true. Everything does. As we just said, Mike, there's nothing that's 100%. What you're looking for is consistency. And I can't think of anything that's much more consistent than a result of over 125% in 2 years. Now, even though you may have a 1 or 2 steps backward, it's going forward that counts, and you can only get 125% by getting that consistency. All right. Now, with this comes detailed instruction. We tell you exactly where the entries, the exits, and the stops are placed. We provide you with 1-year trade signal alerts. Once again, last week, just about 3 or 4 days ago, we provided all of our members with signal alerts to go along the euro yen and the euro dollar, and they should be making at least 100 pips in each one of those by now. So we provide them, but remember, we're not just a signal generating website. We really are an educational website. So what we want to do is make sure that you understand on your own. That's why we provide you with signals, so that you'll understand the process, so that you're basically checking your homework just to make sure that you're in line with what we see. We also give you 1-year weekly trading lessons. That is a webinar that I provide where I help elevate your trading and give you different tips and techniques each and every week. Everything can be put on a PDF so that you can download it, and you can actually make copies of it to study at your own pace. And then you get my personal email access. I just had a student today send me an email asking questions about a certain strategy, and answered them right off the bat. So this Swing Trader course usually runs for $5.95. For all the attendees today, we're dropping the price down to $3.40. It's a great discount. And just off the 2 signals we provided last week to our members, could have paid for this many times over. So this is a great strategy. This is our premier strategy. Once again, 125% in 2 years. And this is documented. These are the actual signals that we've given to our members. Okay? So this is a great strategy. Just for off the 2 signals alone, we would have paid for this course many times over. So if you're interested, the best way to find out more about this course is, once again, to go to the microsite that FX Street has provided for us. The yellow link on the bottom is probably much easier to copy down rather than the one in blue, so you can just get the abbreviated form. And you'll get more information about our strategies, about our discounts, and also about a little background more about me by simply going and clicking on that link. As you can see right here, it'll take you to this page. Okay? All right, so as promised, we are at the question and answer portion. I just want to open up everything here. Once again, I thank you for bearing with me if I may have missed anything, or if it didn't come through loud and clear. I apologize. This is my first time using this platform, so I'm just not real familiar with it. But let me just see about the questions here. I'm just going to try and make this a little larger so that I can read each and every one of them if I happen to miss anything. But just to reiterate, if you have any questions, the website where I provide the full courses, these are large courses where they have upwards of 10 specific strategies for each different market. You can go to special trading for that. Or if you're interested in our individual strategies, such as the one I just showed you for strategy number 5, you can go to protraderstrategies.com. And any questions, please email them to our VP of Research. That's Brett M. at specialisttrading.com. Or you can call us directly at 310-844-7220. Okay, let me get to the questions now. I seem to have found the page, and I'm sorry if I skipped over anyone while you were waiting. Let me just see here. From Carlos, so Steve, there is no need to use the 50% simple moving average for a direction with the strategy, right? No, you always need to provide the 50-period simple moving average. Carlos is asking about a buy-sell line that we use, but that's another webinar. I'm only giving you bits and pieces each and every webinar, just so that not to make it too overly complicated for the new presenters. Okay, that's another one. Carlos, I think you've attended our presentations before. I think you were a member of ours, and you know that's a very important part of all of our trading is the 50-period simple moving average. And also for those people who've attended my presentations before, you know I have different webinars where I speak about that. So I'll go over that in a different webinar, but I didn't want to make it too overly complicated. I just want to like to give you one nugget of information at a time on each and every presentation. Let's see from some people here. So Steve, let's see. With candles, do you include the highs and lows for the 25%? Yes, that's a very good question from Boyke. The candles, really, it doesn't even matter if you're looking at candles. You see, it doesn't. The candle is not what we're focused on. What we're focused on is just the range, the high, the low, and the close, or the opening and the close. So we're looking at the entire high and low, and then we want to see a bar close in the top 25% or the bottom 25%. Now, it doesn't matter if you were looking at a candle, if you're looking at a daily high-low graph. Now, if you're talking about specific patterns, yes, we would have to talk about that specific pattern. But what I was talking about today, when you're closing in the top or bottom 25%, we always include the high of the range and the low of the range. That's what we're talking about. We're not just talking about the body. Okay? So I hope that answers your question. When the candle closes on the top 25% or bull or bear, should we worry about its size, range? Yes, Carlos, it's a very good question. Only, once again, this applies to the actual signal. In other words, because the range will where your stop's going to be. But one of the best things we always tell our students is you know in advance where your stop should be. You know in advance. So you're going to know whether you're going to have a 50 pip stop or whether you're going to have a 250 pip stop. And then you have the option to say, well, that's out of my range. I can't risk that much. Or you can say, boy, that's such a small stop. I can actually maybe trade 2 contracts. Another thing we provide our students with is a series of different type of stops for either for conservative traders or aggressive traders. We give you 4 different stop placements, so you can decide where you'd like to place your stop. We give you the standard generic one along with 3 other ones to decide. So the range does matter because it will help in determining your stop size, but the beauty of it is you're going to know the night before whether you should take the trade or not. So many people trade undercapitalized. And so we always say, listen, if you have a small account and it's a 200 pip stop, don't take the trade. It doesn't fit into our parameters. And we also teach you what those parameters are. Okay, we teach you that and how to. I also gave a webinar for Epic Street using those parameters, showing you how to determine your position sizing. Okay, so yes, it does come into account. Let me look at some more questions here. They're coming in fast and steady, so I hope I don't miss anyone. Let's see. Can we use with Gann angle analysis? Well, from Flora of Fernandez, you can use anything you'd like. You can use it with Gann analysis. You can use it with support and resistance. But one thing, remember, I talked about in the beginning, you want to keep things that are non-subjective. I've been trading for 35 years, and I have never met 2 people come up with the same analysis when looking at Gann analysis. It's extremely, extremely subjective. And remember, we're trying to get away from that. All right? We're trying to get away from things that are subjective. We're trying to get away from that. We're trying really to get the things that are cut and dry. And with a lot of Gann analysis, more people will come up with one answer, and the other half will come up with a different one. So I personally stay away from Gann and Elliott wave and support and resistance because there's too many different answers for that. So I hope that answers your question. Let me see here. Another one from Mike. The strongest signals must be those ones when there's confluence of 2 or more of your strategies. Well, yes. What Mike is referring to is he's saying that when I have roughly about 7 strategies for each different market, some more. When we get 2 or 3 that are giving the same signals, yes, there is a confluence. And yes, it does oftentimes mean that those strategies are going to perform better. There's a higher probability. But there's nothing guaranteed. So even though it makes you feel better and you may sleep better that night, there's still nothing guaranteed. When I went long the euro dollar, I just traded it not because I got a signal in the euro yen or to go short the Swiss franc. I just traded it because it was a good signal. Okay? So I hope that answers your question. Any more? Let me just see if I didn't pass anything right. I seem to have gotten over anything. If I seem to have passed over any questions, I apologize. One of the things I really want to mention, though, is remember, I've just noticed this with so many of my Forex students, is that there's such a reliance on news, on candlesticks, on 4-hour bars, and those are all great. But a signal is a signal. If you get a signal on an hour bar, or if you get a signal with an open, high, low, close bar, it doesn't matter. Just if you feel comfortable about the trade and you feel that it's a good trade and a good signal, take the signal. In other words, don't get locked in to some certain type of trading, like I only trade 4-hour bars, I only trade candlestick patterns. There's lots of different things. But as long as you keep it simple, as long as it's consistent and non-subjective, you'll be okay in the long run. But don't get locked into some pattern thinking I'll only take signals that this certain guru says or only take candlesticks. There's a lot of different ways to flow with the river. Mike asked, in other words, you filter the candlestick signals with the 50-period simple moving average direction, right? Yes, like I do, Mike. Like we've said, that's part of our strategy, but we have to get much more in detail than just that. We have to really, there's a lot more different things that go into that, and that's another presentation. But I hope that answers your question. Flora asks, which time frame do you prefer to trade with the candle pattern? Personally, I like to trade the daily bars, which is just, I just have a better feel for them when I'm looking at daily bars, as I showed you. But if we talked to a couple of my students, they love using this pattern intraday. There's a couple of students I have in Texas who swear by using this on intraday charts, on hourly charts. They say it works fantastic. And I'm sure I've seen some of their signals where it does work great. But I don't really rely on it all the time because I'm giving webinars and I can't intraday trade that much. So it's gotten more and more difficult for me as I teach, I should say, to trade intraday. So that's one of the reasons why I rely more on daily bars. But we have a number of students who just swear by using strategy number 5, the one that is discounted to 340, on an intraday time frame, and they do fantastic. They're wrapping up tremendous percentage gains each and every week just by using this simple strategy. Once again, that is our premier strategy. If you're using the daily bars, which is what we provide signals for our students, that has generated in 2 years since we've provided this service for our members over 125% gains. Okay, now that's using a $50,000 account. Now, that's being very conservative. A lot of students ask, well, Steve, I don't have $50,000. Could I trade this with 25? Yes, you could trade it with 25. But you could also go down and trade it on the mini account, on the mini futures. There's no reason why you have to trade it on the large contract. So there's a number of ways, but either way, the signals we provided, actual real-world documented signals, have produced 125% in the last 2 years. So that's, I don't know something that's that consistent, but we're not trying to go for these home runs. As I think someone had asked before, there are a series of times where we go into losses, and that's normal. Remember, it would be abnormal for someone to say every trade's a winner. I would run if I heard an educator telling you that I have a system or strategy that is always 100% right. Be very weary of things like that. I would be more inclined to listen to some guy who said, yeah, we have very nice signals. They're about 60% correct, low drawdowns, very easy to understand, very simple, non-subjective. That's what you want to be doing. Remember I said the guys that have been trading for 30, 40 years follow plans like that. They don't follow plans that make them millions of dollars every trade and never lose. They're very consistent and they're very basic. Okay, so that's, I think, what you should be interested in. Another question there from Mike. I think the larger time frame, the more reliable the candlestick patterns. That's sure. That's not recommending 1 minute chart. Yeah, that's just a personal choice. It's really up to you how you decide to use it. This for me, that's one of the things we teach. We teach you the strategy, and then we fine-tune it to fit your personality. In other words, if you're a conservative trader, I would teach you and show you and walk with you and show you the ways in which to trade it conservatively. If you're an aggressive trader, I will take your hand and show you how to trade it aggressively. So it's really Once again, this is where we really, I think we're above and beyond the rest, where we take your hand and really educate you. We're not just about providing you signals. We really want you to understand the process and to be able to trade on your own. So I'm not influenced by data releases. No, Aboike, I really have never, ever since I was on the floor, I have never even looked at news. I don't care about news. It doesn't matter to me. All the results from the past 2 years of that 125% were generated off signals that we gave students, not even worrying about what the news reports were. So if they were that much of an effect, we would not have gotten that kind of results. So it doesn't matter. Those, in my opinion, news and economic reports are very important if you are an investor holding something long term. But most of our trades last anywhere from 3 to 5 days. And if they influenced our trading that much, there's no way we could have gotten those results. So if you look back 2 years for all of the signals we provided, there were economic data in probably each and every week we provided a signal. So it doesn't have any effect. The market is the only thing you should be influenced by. The market tells you most of the time, for the majority of the time, what it's going to be doing in advance. So that's what my mentors taught me. That's what you should be focusing on. Not economic reports, not chat rooms or trading rooms. We don't provide those at Specialist Trading because we feel that those influence you in the wrong way too much. You start to rely on the trader and think that, well, I'm just going to do whatever he does. Trading should be fit to your style. You should never try to mimic or mirror what someone else does. You should fit it to your style. We can have 2 signals that we generate. One of our traders can have a 50 pip gain. Another one can have a 250 pip gain. It's all decided on how he wanted to trade it. And so that's the beauty of what we provide. Education, sound and solid education for you. Okay? I think we have just time for just maybe 1 or 2 more questions. I don't want to take anyone else's time if they're speaking after me, but I really appreciate the opportunity to speak. And I want to say thank you to the people at FXG for giving me this opportunity and for helping me along the way here. I hope I didn't miss anyone or go over something without someone hearing or seeing. As I said, this is the first time I did this, but I'm sure it will get much better as we go along. Thank you so much. Remember, this is the information. If you have more questions or anything, I really implore you to take advantage of that discount. It doesn't get much better than that. So if you're interested in using our best strategy, contact us at this information right here, and we can give you that discount for the next couple of days. Thank you so much. We'll see you next time, and thank you, FX Street. Bye-bye.